G'day everybody, my name is Aman Raina. I'm an investment coach here at Sage Investors, and welcome to another edition of Stock Talk, where we talk about all things investing and the stock market. Today, if you take a look at the market today, Apple is kind of in the news. They're kind of taking it in the pants. Stock's down like 5%, reporting their earnings yesterday. A beat on profits, but the revenue numbers a little bit soft, and it's got a lot of hand wringing going out in the market. And I thought about today I would talk a little, put some context into some of the rumblings that you're hearing by the analysts and prognosticators and the pundits who know everything about the Apple. And a few things kind of jump out to me. One is just looking at the numbers, and it's interesting that they sold like 75 million iPhones last quarter, and apparently all the analysts just think that's not enough. 75 million, like, I guess put that into context, 75 million phones. Like, I live in Canada, and we got about, what, 32 million people here? So that's almost like 2 phones for every person that lives in this country. 75 million phones. And I remember, like, if you go back 3 or 4 years ago, when the stock was in the downdraft or was having a hard time, they were selling 45 million phones at that time. And they said that was, and the analysts were just pounding on it, saying, you know, that's just not acceptable. And now they're selling 75 million phones. They've almost like literally like 1.5 times more than what they were before in a supposed downdraft. So, you know, put context. A lot of times we get so focused on the numbers that we just take a look at the numbers for what they are, and it's just incredible amount of performance. A lot of companies would sell 75 million of anything, let alone phones. Other thing that jumps out is it's just the amount of cash, the cash in the bank. It's about $216 billion. Like, they could just go out, I believe they can go out and buy every professional sports team in North America and still have like $70 billion left over for chump change, and maybe go out and buy Twitter. Context, the company is just continuing to generate ridiculous amounts of cash. It's just the ultimate cash cow. And you know, when you see a stock, you wouldn't know about it the way you hear people talking about the stock today. So numbers, always put the numbers in context. Sometimes you just get so immersed in the number part that we forget about, okay, this is like fantastic. That's unbelievable performance by any kind of company. Other thing I want to talk about a little bit is about one of the things we get into a trap and a habit and fall in the trap of is we fall in love with the company, and then we kind of extrapolate to mean that we got to go buy the stock. And a lot of times, just because the company is really well run, well managed, and delivers products that we love, like, you know, Apple, I got all things Apple. I'm talking to an iPhone right now. And a lot of times that doesn't mean you go out and buy the stock. And I know Peter Lynch is a big advocate, invest in what you love, invest in what you know, but a lot of times when you do that, you kind of, emotion is kind of driving that decision-making factor. So kind of take that into context that there should be a separation between looking at the company and looking at the stock. And a lot of times when I'm looking at companies, there's a lot of great, well-run companies out there, but then when I start looking at the valuation, I go, ugh, maybe I won't buy it now, or maybe I won't look at it now. I'll put it on a list and wait for the stock to come back. Finally, I guess the other thing really that jumps out to me is sort of Apple has been a classic textbook example of sort of what drives our behaviors. As human beings, we want to be associated with the winning team, with the cool factor, with cool products, cool people, cool ideas. And Apple, over the last 5-10 years, has been sort of that it company. Like, we want to be around that halo, or around that action of you know, that ecosystem. And what happens is, like any other company that happens, that organically develops, is sometimes, you know what, you just don't become the it. You just don't become the it company anymore. All companies go through ebbs and flows, but unfortunately Wall Street and Bay Street prefer companies to be going like that. And that just doesn't work out that way. And sometimes companies just have to catch a deep breath. So that's just another factor you need to be mindful of, is when you're looking at companies. It's just not always chasing the glorious, sexy kind of stock. A lot of times boring, mundane companies are just as great at creating long-term value than the it kind of companies. And finally, I guess the other thing was building on my previous Stock Talk episode about experts is you're going to see a lot of experts showing up today in the next little while, kind of just starting to say how Apple has lost its way. Kind of, we're going to see that lost its way. It's not unable to innovate properly. They're going to start poo-pooing the iWatch. And a lot of times when you start hearing people start, slamming a stock or slamming a company, that's usually the time when you want to start doing some due diligence on the company and actually dig down into those numbers and into the sentiment of the company and see of the stock and see if it's worth holding on to, if it's actually there's a buying opportunity, there's value in it. So it's an important factor when you're framing that decision, is we have all these biases coming at us that are kind of going to cloud our judgment. So I'm just saying, listen to the experts, what they're going to say about Apple, but take it into a little bit of context and take the numbers into a bit of context and step back a little bit. Because in a time where a company might get in a downdraft, it actually might be an opportunity to start doing some more deeper due diligence. And I did this about 4 years ago when Apple was getting kicked in the pants, and people saying the company couldn't innovate, when meanwhile the company was selling 45 million phones, generating incredible returns on capital. It only had 100 billion in the bank, but 100 billion bank is, again, companies would kill to have that kind of access to capital. And sure enough, they reconfigured some of their products, and they caught an upwind. And so that's how stocks evolve. And it's just important on days like this when you're seeing a company taking a hit, when you're looking at the fundamentals of the business and it looks pretty solid still, you've got to put that in context. Context is really important. So that's all I wanted to share with you today. If you have any questions, you feel free to give me a shout either through my website, www.sageinvestors.ca, or through my Twitter handle, @sageinvestors. You can DM me, and if you've got something you want me to chat about, talk about, I'm happy to put something out there, and look forward to hearing from you. So it's been another edition of Stock Talk. My name is Aman from Sage Investors, and we'll catch you again another time.